There really isn't much of a difference between the two. I mean, they're all both written on the same standard form that applies to every auto that's tied to essential ownership. One of the main ways that it differs is in the classes of vehicles are going to be different than what you see on a personal policy, and also some of the endorsements that are included with that on a personal policy. Some of the more common rating classes on the commercial side of things that you will see is your class 36s. Your class 36s are your, kind of light pickup trucks or any sort of vehicle that's under the 4,500 gross vehicle weight class. And then you're going to go into your heavier ones, which is a class 44. So that's things that are kind of over the 4,500 GVW rating classes. There's also class 42s or class 40s, which is like your long haul hauling for others type exposures. 42 being gravel, 49 being hauling for others within an 80-kilometer radius, and then you get into your class 61s, which is your interurban classes as well, and long haul trucking into the states. There's a lot of overlap with the endorsements on a personalized policy versus a commercial lines policy. Some of the ones that are more applicable to commercial actually are designed to remaking coverage that's previously excluded. For example, the SCF 4A and 4B is for radioactive and explosive materials. Hauling of that stuff on a traditional policy is typically excluded by virtue of the wording. These two endorsements essentially bring it back in. The SCF 30 and 30A, those ones speak to attached equipment. A lot of commercial vehicles have attached equipment to them that's specifically designed to be, covered off on a general liability or property policy. This mechanism is actually designed to take and do that so that the coverage essentially goes where it needs to be. SCF 21B is a blanket basis fleet endorsement. That's one of the ones you see on some of the larger fleets. And also one that doubles up along with a personalized policy is your SCF 40 fire and theft deductible endorsement, which brings in a deductible for fire and theft, of total fire and theft of a vehicle when SPF 1, the way it's set up, doesn't exclude or doesn't charge a deductible for that coverage. Three main ways to kind of set up a commercial officer depending on the need and the size of the fleet. If it's a vehicle fleet of from 1 to 5 vehicles, the best way to kind of set up is on an IRCA or individually rated commercial auto policy. Outside of that, you can go to a fleet rated scheme, which can be done by either the means of a scheduled fleet or a 21B blanket basis fleet endorsement. Scheduled fleets kind of work the same way as an IRCA policy. Each one kind of has their own line. All additions and substitutions and everything like that need to be accounted for at the time of the substitution, whereas on the 21B basis, everything's done on a blanket basis and they're all kind of rated according to class. So the nice thing about it is if you have a large fleet of vehicles with a bunch of substitutions going on at the same time, it gives the ability for the client to add vehicles kind of at their leisure and not have to report every single addition into the insurance company.